Hello and welcome to the first SMC FX webinar. Currently, this is the only webinar we have planned for the time being. So we'll see how this one goes, and we may possibly conduct another webinar later on in the year. So first off, just to introduce who we are as SMC FX. My name's Chris. I'm the founder of SMC FX. I've been trading for about 6 years or so now. It's coming up to 7 years. I started trading Bitcoin about 6 years ago. Blew a couple of accounts with Bitcoin, and I started to look into how trading actually worked. So at the time, I was following the hype of Bitcoin being in the news, hearing of people making loads of money from it. I gave it a go. I failed at it, but I didn't let that failure stop me. So from there on, I decided to look into how people were actually able to make money through trading. So that's where my personal journey began. And Neith is our co-founder, who is on with us as well.
Right, guys. So similarly with Chris, I think a lot of us started with Bitcoin, cryptocurrency, because at a specific point in time, in the past few years, crypto was, the thing. Everyone was getting into crypto. So that was something that I personally got into before I actually started trading Forex. My background, I used to be in 2 startups that I co-founded. And that was, funny enough, that was when I first got into trading. And that was the first time I found out about crypto, because one of our neighbors, he traded crypto heavily. He used to hold a lot of Bitcoins. And funny story, back in 2017, he told all of us to buy Bitcoin. He had 16 or at least 16 Bitcoins in just one wallet. And right now he must be a multimillionaire. So like Chris, we all started somewhere, and I found my passion in trading while I was co-founding the 2 startups I had. And as soon as I figured out, what my passion was, which was trading, that's when I pulled the plug and left my startups. It was a very, very difficult journey, but till this point, I do not regret doing that at all.
So how did SMC FX start? So during our time of learning to trade and observing how other communities approach teaching and trading, we noticed a few things that we didn't really like. And some of these things were things like overcomplicating things with the purpose of creating new content for social media. People changing their methods frequently, communities being overcrowded, and queries or questions not being answered. So these are a few things that really grated on myself and Neith. So in October 2021, we decided to create SMC FX and give our members the attention they require, with the sole intention of keeping things as simple as possible, as we're about to see with Neith's order flow breakdown. Neith, I think your mic's cut off, mate.
Sorry. So, right, guys. So I'm going to run through a really simple order flow video. It's going to be a quick lesson, and it is a slightly different take on the very standard order flow lessons that you might see on YouTube or in other communities as well. Not saying it doesn't work, but I believe that the method we're about to explain is a much easier method in terms of identifying what order flow looks like. So, in the standard procedure of what order flow looks like, a lot of times we see things like this, where they tell you that order flow is a mitigation of demand or supply zones on the way up. But what I'd like to introduce, right, and it's something that I believe you should test and, understand for yourself that this is going to work out, right? So let's have a look at the first thing, which is bullish order flow. We're also going to be covering bearish order flow right after. And I'm going to show you a live chart example of Aussie dollar in the past week. So having a look at, just bullish order flow, we can identify that bullish order flow, bullish structure essentially creates higher highs along the way, right? Along the way, there will likely be several mitigations on the way to the upside, right? There may be decisional zones, or there might be extreme zones that you see on the way up in the market. Now, these are, this is a very classic example of what bullish order flow looks like. Now, if we just dive down, right, dive down into what actually happens in that little move up, right, and look into, the small detail of what bullish order flow really is you have several demand ranges forming, right? Demand ranges, in other words, you have a range of sell candles before an impulsive move or a move that does break structure. Now you have a couple of demand ranges on the way up, which creates this huge push up that likely breaks structure somewhere along the way here, right? And then what you see is you have several breaks of structure. And when we're forming a pullback down, we also create supply ranges, right? So we have several supply ranges that pushes price down. Now, when we have several supply ranges, what we need to understand is currently what we are in is a pullback phase, right? Because we're in a pullback phase, chances are price is likely going to push right back up. And along the way, there'll be several demand ranges forming again, right? Now with bearish order flow, it is almost the exact same thing, but just the complete opposite, right? As price pushes down, you have several supply ranges forming, which in other words, will also have mitigations, right? Because these supply ranges, what you tend to see is you have a range forming here, and the next range that forms mitigates or taps into that range and follows all the way down, right? So you have several mitigations of ranges on the way down. So because you have that, right? Similarly, with a pullback phase, what you have is several demand ranges forming. Now, because of this demand ranges forming, you can also tell that this is a pullback phase, which will likely then form a continuation phase down, which also follows up with several supply ranges on the way down. Now, like I've mentioned, these supply ranges will always mitigate each other. So if this is a complete supply range, the next supply range will tap in and then continue pushing down. So let's have a look at a live example on Aussie US dollar on the 15-minute chart, which I have marked up beforehand so that it will take a lot lesser time to actually explain it. So what does a supply range look like? Now, supply ranges in its complete form will be the last few buy candles before a sell move down. So this is a textbook explanation or a overall view of what a supply range looks like. Now, this is a supply range as well. You could consider taking this, but if you really look at the last true buy up and the sell, it would be this, right? And sometimes, occasionally, you may not get that mitigation here, right? These are all just rough markups of what supply ranges look like. And if we just, zoom out a bit, and what do we see? When you mark up all these different ranges, right? You've got a demand range here and a push up, you've got break of structure, another demand range forming. And after each demand range forms, it follows up with a break of structure, right? So you see how we have broken structure, and then all of a sudden we have this, pullback all the way down, and that forms a supply range. What you can see is this supply range got a reaction, right? We sort of broke the swing low over here and we came right back up, because understanding that the overall bias of the market is bullish at this point because of all the demand ranges we're forming. We only have one supply range here, right? So what this does, right? Using this concept of supply and demand ranges does is when you look at the market, be it on the 15 minutes, the 30 minutes, any way you mark it up, right? You can mark this on any time frame you want, and it's going to give you an overall perspective of what sort of market we're currently in. So if you have a look at Aussie dollar now, you can clearly say that we are in a bullish order flow market, right? We have a lot of demand ranges forming on the way up. We have a couple of supply ranges forming, because these supply ranges are essentially the pullback that we see in the market every now and then, right? So you notice how almost every demand range tends to get mitigated. You have a demand range, break of structure, mitigation. Demand range comes in, taps in. Demand range comes back, taps in. Supply range also gets taps in, but breaks through because we are currently bullish. So this is an overall idea of what you can do to identify order flow in the market, which is marking up your supply ranges and your demand ranges on the timeframes that you specifically trade on, or you can just mark them on the 1 hour to get an overall perspective of what sort of market we're currently in. Are we in a bearish order flow market, or are we in a bullish order flow market? Based on that, you should be able to understand what sort of trades will work and what sort of trades would not work, right? If we're in an overall bullish order flow market, would it be better to take longs or would it be better to take shorts? Now, your answer should be if we're overall bullish in bullish order flow, you'd likely find a lot more longs working out versus shorts. Does that mean that shorts won't work out? Absolutely not, because as we all know, in every move up, there is a pullback. So these pullbacks are regions you can confidently take shorts, but you have to understand that when you do actually try and take these shorts, you need to have targets that are either targeting the next demand zones or the next demand range. Those are specific targets you can confidently target and expect that price is going to hit that, right? So that's a really quick and simple, lesson on order flow. You could look at just, purely mitigations. Like if you have a look on the 4 hours, you can see that we are mitigating points in the market and moving up. But if you dive into the 15 minutes, you get an overall view of what's going on really in those huge moves up and down. So that will be all for this order flow lesson, guys. It's just a really quick sneak peek as to what sort of concepts we teach and how we teach it, because we don't want to overcomplicate you with things that may not actually matter. And just to summarize what I've taught, I've just explained what supply and demand ranges look like. Supply ranges are usually the last buy candles before a move down. Demand ranges are the last sell candles before a move up. To identify order flow, you simply mark the last buy and sell candles in terms of supply and demand ranges and get an overall perspective on which color you see more. The main reason why I've color coded them is because when you look at the market here, you can identify what color appears more, and that gives you an idea as to what order flow we're currently in. So that will be all for this order flow lesson, and Chris will go ahead with a higher time frame analysis.
Thanks, Steve. So what we're going to do is going to do a quick top-down analysis of a currency pair. So at the moment, I'm just currently looking on the euro US dollar. So this is kind of going to be my forecast for the upcoming week and what I'm going to be looking for in terms of potential trade opportunities for the euro US dollar. So at the moment, we're currently on the daily time frame, as you can see. Now, we've got a bit of bearish order flow, so we're currently in a downtrend, as you can see. And so we've got a few points of interest that we can look at from here. First off, we've got this supply range here, and then we can also refine slightly to the last candle before the impulsive move down. So we could look at the last buy candle before the push downwards. However, we've got some price action within this wick that we are likely going to refine down to in just a moment. So I'm going to include this candle as it's most likely going to be this one that we're going to be refining shortly. So let me just code this one. Go. So this push here is broken past this low. It's not a very significant low, but it's still a low that's been broken. So we're just going to mark this off for the moment. Apparently, this is the closest zone that we've got of any potential interest. We've also got a demand zone down here. So we've created this lower high, and then this lower low has then pushed past this high. Okay, so we're going to mark this zone as well as a point of interest. So we've got our demand zone, and then we've got our supply zone. So let's just mark the supply as well. So let's have a look on the 4 hour. Let's have a look to see what these zones look like. So this one here, as I mentioned, obviously this entire movement here is that daily wick. Now within inside this daily wick, we've then got this inside bar. So this is where I'm going to be refining to. Now we could theoretically use the entire buy candle before the sell. Now that's quite a large zone. We've then got this inside bar, which is marked in blue. So this is a zone that I'm going to be looking at a little bit more closer during the week. And when it comes to our demand zones, we've got some bullish order flow going. We've been breaking we've broken this high here. So this high that we looked at on the daily is a bit more prominent, okay? This bit of price action was mostly sideways. We've got a bit of a range going on here. And we've got a bit of a range going on here, but we can then incorporate the entire bit of price action as a range. So let's mark the entire area. So we've got a range. Like I mentioned, we've also got this in the middle here. So on the lower time frames, we've got these two zones here, where we can see price has just gone sideways. So let's have a little bit of a closer look at this bullish trend going on just here. Now we had this zone here. So this was our daily. So this I shall be refining to, actually I won't be refining it. I'll be incorporating this zone as well as the daily zone. So this is our daily. This is going to be our 4 hour. Just change the color of that. So this zone has not yet been mitigated. We've got a tiny little bit of imbalance. Majority of the imbalance on the 4 hour has been cleared up. Okay, so at the moment, we still haven't mitigated this. We've cleared majority of the imbalance left here. So at the moment, we'll keep an eye on this zone. We could even set an alert for this. But two other points of interest that we've got as well. We've got this push, which has broken this high. This high, this zone, just going back to this zone, this one here hasn't actually broken a high yet. So what's happened here is we've created this zone. We've had an impulsive move up. We've had a supply zone here. So we've had the candle close, but then as we've come back down, we've then pushed back up again. So we've not had a full mitigation as we've then started breaking more structure. So this zone here, so I'll mark this one out as well. So this supply zone has now been invalidated. We've had a close above it, okay? Price has come back down to this region, and then we push back up again. So we've had this breaker structure here. So this zone, we're now going to delete this, and we're just going to put a line here that tells us this zone has now been invalidated, okay? So we've now got this zone up here. So at the moment, we're kind of looking at this candle with a large wick inside. Now we can refine this as we go down the time frames. I'll probably only refine this down to the hourly to have a look at that. So we'll have a look at that zone in just a moment. And then we've got another demand range going on here. So at the moment, I'm going to be looking at the last candles before the impulsive move up. We've got a structure break here. We've also had a structure break here. Okay, we've also had a structure break here, but this one was not as strong as the previous ones. As you can see, these are quite impulsive. They've closed nice and high above the previous high. But then when we get to this one, it hasn't closed that high above here. So at the moment, we will keep an eye on during the week to see if new higher highs are created and how strong these highs are created. Because if they're not going to continue to keep up the momentum, we could then see some retracement to come back to mitigate some of these zones down here. So at the moment, we don't really have a nice clear zone to look at. We do, actually, we've got this doji candle just here. So let's mark this out as well. And then we'll have a closer look at these zones on the hourly time frame. Right, so offers demand. And there we go. So before I drop down the time frames, what I will be doing is this zone is an area of interest for me. So what I'll be doing, I'll place, I like to place these lines, these horizontal lines, and then I'll just place an alert on these. And this, if that gets triggered during the week, I can then look for an entry model on the lower time frames for a potential short entry here. So at the end of the day, this is the daily zone, and on the daily, don't forget, we are still currently bearish, okay? We've broken this high on the daily, but this was an impulsive high, and at the moment, we still, if this zone gets broken, then I'll be looking for a lot more long trades on the daily. But like Neith covered in his order flow lesson, okay, we can still look for longs up to our daily zone, and then if this stays respected, then we can continue looking for shorts. So those are the zones I'm looking at on the daily and 4 hour. So let's have a little look on the 1 hour. I won't be refining any lower than the 1 hour for the time being, purely because we've got a lot to play out during the week. So these zones down here, let's have a closer look. So this zone I won't be refining any further because that incorporates this bearish candle before the aggressive bullish push. This one here, we can look at as a demand range. Here, we can refine to this last candle here. So this is the extreme move, the extreme point before the push and the break of structure of this high. Okay, we've got some imbalance here. I can mark out. My imbalances, I mark with a little arrow just pointing to the area of interest. We don't have a lot of imbalance here either. So this zone here, what I might actually look for is this as a refinement on the 1 hour. So this zone is a zone of interest because this one's left a nice bit of imbalance behind. Only a little bit of it has actually been cleared up, so it's not really had a full mitigation of the imbalance, and this zone still hasn't been mitigated either. So with our trading, we follow a set of rules. For our supply and demand zones, they need to meet three rules for them to be valid. It needs to break structure, it needs to be impulsive, and it also needs to leave some imbalance. Okay, so this one fits our criteria more than some of the others below. Now, it doesn't mean if it doesn't fully meet our criteria, we won't use it. Okay, so this one, for example, hasn't left any imbalance, or it has left a little bit of imbalance. But what that will mean is if price comes to this zone, our entry, supply or demand zone, has to meet all three of those rules before we can actually press that button to take the trade. So with the higher time frame zones don't meet all three rules, we then need to see how price reacts when we get inside of those zones. So this is a refinement I'm going to look for here. This zone here, we've got, I'll zoom in a little bit so you can see it. We've got an inside bar before our break of structure. So we've got this high here. It's not a very significant high. However, it's still a high and it's still been broken. So this is going to be a point of interest for us to look at as well when the markets open on Monday morning. And again, this is going to be our next zone for me to look for a potential trade. So here, I will be setting an alert. We'll have a look to see what price does if or when we tap into this zone. So this move here, excuse me, right, yeah, so this move here, it's broke this high. We've had a bit of bullish movement up here, and then this has then broken this high here. So this is a more significant high. So now that this significant high has been broken, we've then got this less significant high being broken. For the moment, this gives this zone that we're looking at a slightly higher probability of working out. Bearing in mind, we've still got the daily supply zone at the top that we are yet to mitigate. So if we are able to get an entry within this zone here, we could potentially target just shy of the daily zone here. So for the time being, this is all I'm going to be looking at for the week ahead for Euro US dollar. So if these higher time frame zones do get mitigated, what I'll be looking for is a lower time frame entry. We will either look for something along the lines of a chock, a flip, or even some kind of lower time frame inducement. And the entries would typically be somewhere between the 1 minute and the 5 minute time zones. So hopefully you found this a bit useful. So that will be all for the top-down analysis, and we shall move on to the next part.
Right, guys. So we've just finished our top-down analysis. We've finished a lesson on order flow, and those are small glimpses as to the wide variety of content and trading courses that we offer in our community. So how can we help? That's something that a lot of people ask because there are 100 different communities out there. How can you help? Right? We offer a range of courses and topics in our trading course. We also have an active community. Because of how our community is, we have a lot of people that are all around the world, with people in the US, the UK, Singapore, Malaysia, and a lot of places. That is one of the reasons why our community can also remain active, because we have people talking throughout the day. And we are also very proud to say that we offer much better support than a couple of communities out there because of how tightly knit and small we keep our group. We don't want to have a group that is too big because it would be practically impossible to provide support to any of the members in the group. Now, moving on, one of the things I want to cover is you might be wondering, Neith, you've spoken a lot about your trading course, but what do you actually offer? Now, these are almost everything, or almost everything, basically. We have supply and demand zones, right? We have a supply and demand course, market structure, liquidity, order flow, entries, putting it together, which is essentially a video on how you can combine all the concepts taught right before this. We have strategy variance. Now, strategy variance is something that we are quite proud of. It is a couple of strategies that utilize the concepts we explained. So some of them will be a swing playbook. So it is a swing methodology, a scalp playbook, which is essentially trading scalp. And another thing we have, which is a Asian session method. Now, it is a method that works on two different pairs at the moment, USD JPY and Aussie dollar. It is a method that allows you to collectively almost get 5R or more, 5% or more during a 1 hour time frame or 1 hour time block during the day. We also have trading psychology because we believe that you may know everything there is about SMC, but if you don't have the right mindset in terms of how you trade, how you execute, and your state of mind while you're trading, you will likely not be able to find consistency or, matter of fact, succeed in your trading. We also have weekly forecasts that we do, pre-market forecasts before the week starts. We have a bi-weekly Zoom call, which is usually either a Q&A or a video, call where we cover specific topics that our members may be struggling with. Last but not least, we have journaling templates and we have a trading plan template because we understand that people get very curious or very confused with what sort of segments should they have in their trading plan, because some people's trading plan may tend to be 10 pages long, but we have a fixed template of different sections which you should include in your trading plan.
So we've got some upcoming plans to make our course more user-friendly and more accessible to everyone. So at the moment, we are currently working on redesigning our website and redesigning the course dashboard. So at the moment, what you can see here is just a current work in progress of the type of thing we're looking at or looking to implement. At the moment, our dashboard, the current dashboard we have, it does work. It's not as pretty as this, and so we're just looking to utilize a few more features within the new dashboard as well. So what we're looking at incorporating is a live news feed. So things like scheduled news, like high impact, medium impact news and stuff like that. We'll be incorporating a lot size calculator as well into the dashboard. And we'll also be looking at trying to get a live link to our charts. So underneath charts, you'll be able to see live what we are looking at any given moment of the day. So that's something we are incorporating, and the new dashboard, we are aiming to have this live, hopefully by the end of June. So currently, if you are interested in becoming a member of SMC FX, we've got three pricing methods. So at the moment, we've got the monthly, the yearly. Both of those incorporate the same features. So the full SMC methodology course, weekly forecast and daily outlook, trading psychology, exclusive Discord community, and the bi-weekly Zoom meetups.
Now, we also have a mentorship plan, which is essentially a mentorship program that lasts throughout a full year. We have a full roadmap and structure as to how the whole flow of the program will run, which is something we usually run through with our members as soon as they join us. Now, this covers everything in the monthly and yearly, the course, weekly forecast, and etc. The main thing that I want to bring across is we provide one-to-one mentorship with Chris and I. We also explore what sort of trading style suits you, because we understand that some people may be working a full-time job and trading a specific way or strategy may not suit you. So we explore as to what sort of style suits you and what you can incorporate in your current lifestyle. We also look at formulating your trading plan, because if you don't have a plan, you cannot possibly execute the right way. So this is something we work very closely with our members to formulate and create a trading plan that actually works and has proven to work through the backtesting results. We also have a lot of one-to-one coaching calls that you can request anytime you need help, be it psychology, you found something that you're unable to figure out, your trading isn't working, or even small things like your trading plan, you found that this isn't suited for you. And occasionally we even have calls on psychology, because some of our members, when you first come into trading, your psychology may not be in the right state, right? You might be struggling with your mindset and also the emotions you feel throughout trading. Now, last but not least, we also have a mentorship exclusive channel. Now, this mentorship is a £700 package that will give you unlimited access to the course as well as the Discord channel. We've mainly made this a one-year program at first, because we believe that in 1 year, we can turn you from a beginner to hopefully a funded trader, or at least a trader that is consistent. We have limited intakes per month because we don't want to overcrowd the group with too many people. So there will be limited intakes for this. And if you'd like to sign up, in the following a few slides, you'll likely find a QR code to sign up there.
So if you've been following us on Instagram recently, you'll notice that our introductory offer is coming to an end. So when we went live with our trading course at the beginning of the year on, I think it was the 1st of January, we had the introductory offer, as you can see here. So the £50 monthly, £500 yearly, and the £700 for the mentorship. That will be coming to an end, and the new pricing will come into effect as of the 1st of June. So this is something we've been mentioning for a little while. So if you are looking to get involved, the last few days is going to be the last chance to get locked in onto the current pricing model that we have. And then moving forward, the standardized pricing is what you'll be able to see there in the blue. Now, if you're interested in what our community members have been saying, you can have a look at our Trustpilot reviews. Feel free to search us on Trustpilot. We'll leave this screen up for a moment if you'd like to have a quick read of these reviews just here.
Right, guys, so those are some feedbacks that our members have to say about us. There are a lot more feedbacks that you can see for yourself in the group itself. Now, I'm sure some of you may have questions as to what we've just explained. And if you'd like to drop us a DM at SMT_FX. And if you'd like to follow our personal socials, they're displayed on the screen. Now, we'd like to thank all of you for taking time from your busy schedules on a Saturday to come down for the webinar. And we hope that you have a wonderful week ahead, as well as a wonderful trading year ahead. Now, if you'd like to get started with us, feel free to scan the QR code on the screen currently. This QR code will directly take you to the SMTFX plans page. That's where you'll be able to sign up for the current membership plans that we have. Now, for the mentorship plan, we have a waiting list. So when you do click the button, it will redirect you to a Google Form waiting list where you'd have to fill up a few different columns that we want to know before we actually decide whether you are a suited fit for the mentorship program, because we take pride in terms of vetting through every single application form we get to see if you are the best fit for the program itself. Now, once again, I'd like to thank all of you for taking the time out of your Saturday to attend this webinar, and we hope you have a wonderful weekend ahead.
Thanks, everyone. See you soon.